Berkshire Hathaway's success will continue after Charlie Munger, RIP, and Warren Buffett pass away. Hey, there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Get ready for the seismic news as we explore the significant developments surrounding the passing of the dynamic vice chairman of Berkshire Hathaway, Charlie Munger. At nearly 100 years old, Munger, a stalwart in the financial realm, leaves an enduring impact on Berkshire's legacy and the investment landscape. This is not merely a setback for Berkshire Hathaway, it reverberates through the 60-plus years of Munger's partnership with the legendary chairman and CEO Warren Buffett. However, financial enthusiasts need not fret, as even in the midst of this transition, Berkshire Hathaway, the economic powerhouse, stands resilient. Imagine this, a decade ago, our astute research foresaw the inevitable departure of these financial giants. We asserted then that Berkshire had laid the foundation for a smooth transition when Charlie Munger and Warren Buffett eventually stepped down. The key lies in strategic capital allocation into companies capable of absorbing the substantial cash flow generated by Berkshire's diverse operations. Buffett's expertise wasn't just about expanding capital, it was also about cultivating a culture and synergy when integrating new ventures. Fast forward to today, and we witness the transformation of Berkshire from a reinvestment powerhouse to a giant focused on capital return. The baton is poised to be handed over, and we firmly believe that the Berkshire culture of autonomy and entrepreneurship is deeply ingrained, transcending any single leader or the Munger-Buffett duo. Certainly, we acknowledge the irreplaceable void left by Munger's departure and eventually Buffett's. The unparalleled synergy between these two financial wizards, Buffett and Munger, has always been noteworthy. However, investors should understand that I consistently championed Berkshire as the epitome of a decentralized conglomerate, a master of capital allocation with minimal shareholder costs that can weather virtually any storm. The show will go on with the next set of managers at the helm. As long as the efficient operating structure remains intact, Berkshire's decentralized approach ensures that the focus on portfolio stewardship and capital allocation will persist. In the grand financial opera that is Berkshire Hathaway, the finale of Buffett and Munger's act may be approaching, but the symphony will endure. Charlie Munger, the esteemed right hand to Warren Buffett for an impressive 6 decades, was more than just a sidekick, he was a savvy investment maestro in his own right. Munger's legacy extends beyond Berkshire Hathaway's success to the timeless investing wisdom he generously shared with the next generation of investors. While Buffett refined his skills under the tutelage of Benjamin Graham, Munger elevated the game by shifting Buffett's focus from cheap stocks to quality companies. Under Munger's influence, Berkshire transformed into a diversified conglomerate spanning insurance, railroads, and consumer goods. A shining example of Munger's impact was the acquisition of See's Candies in 1972, a move that pushed Buffett's comfort zone in terms of price. Munger wasn't one for the conventional diversification gospel, he considered it insane to spread investments too thin. Instead, he championed the concentration of resources in one's best ideas, rejecting the notion that a vast array of opportunities could easily be identified. Similar to Buffett's circle of competence, Munger emphasized focusing on areas within one's expertise. Knowing the limits of one's intelligence, according to Munger, was a crucial aspect of practical wisdom. Brands and customer loyalty were Munger's secret weapons. He believed that Costco was one of his best investments, highlighting the importance of buying quality companies that would endure for generations. Waiting for Munger was an art form in investing. He believed the big money lay not in buying and selling but in patiently anticipating the right moment. Cryptocurrencies were another realm where Munger took a firm stand, dismissing them as a malicious combination of fraud and delusion. Charlie Munger expressed his straightforward views on Bitcoin, referring to it as absurd, worthless, and artificial gold. He dismissed trading digital tokens as a form of dementia. Munger's skepticism wasn't limited to Bitcoin, it extended to commission-free trading apps, which he criticized for facilitating momentum-driven trading by amateur investors, particularly during events like the meme stock mania in 2021. In Munger's world, wisdom went beyond making quick moves, it involved patiently waiting for the right moment, focusing on one's knowledge, and avoiding financial fads. His words now serve as a guide for investors navigating the ever-changing seas of the market. Even Warren Buffett, the Oracle of Omaha, acknowledges that the monumental success of Berkshire Hathaway is intricately tied to the brilliance, wisdom, and active involvement of his longtime partner, Charlie Munger. Munger's contributions go beyond conglomerate management, they form the foundational principles that resonate with anyone aiming to strengthen their financial position. Let's delve into 5 key investment principles that propelled Munger to a personal fortune of $2.4 billion while steering Berkshire Hathaway's stock to a remarkable 4,000% increase during his legendary tenure. Know your strengths. Munger's sage advice is to discern your own aptitudes and operate where you have an edge. Competing in areas where others have the advantage is a sure path to loss. Stay within your circle of competence by focusing on industries and companies that you genuinely understand. Incentives matter. Munger's mantra is, "Show me the incentive, and I will show you the outcome." Recognizing and understanding incentives is crucial for making sound investment decisions. A flawed incentive system leads to suboptimal results, and grasping this dynamic is key to navigating the complex world of investments. Embracing the margin of safety, Charlie Munger adhered to the value investing theory of a margin of safety by choosing securities trading well below their intrinsic value. Similar to a robust bridge designed to withstand more than its expected load, investments, according to Munger, should offer a cushion for unforeseen losses. Safety in his world wasn't just a priority, it was a necessity. Investing in companies with a competitive moat. In alignment with Buffett, Munger championed the investment in companies with a competitive moat. These are businesses fortified with protective layers that shield them from rivals. The value of such companies, exemplified by Apple's ecosystem tying hardware to recurring revenues, is not just substantial, it's enduring. The power of compound interest, an often underestimated principle, compound interest was the quiet force that fueled Munger's financial success. Reinvesting gains from solid, competitive, and predictable companies over the long term yields exponential growth. Munger's wisdom encourages incremental growth in wisdom, faithful discharge of duties, and the building of discipline to weather the long game of financial growth. Charlie Munger's principles aren't reserved for an elite few, they form a blueprint accessible to anyone aspiring to financial prosperity. In the intricate dance of investments, Munger's footprints serve as an invaluable guide for those who dare to follow. His legacy extends beyond the walls of Berkshire Hathaway, providing a compass for those navigating the complex seas of finance. Munger's teachings, encompassing the importance of staying within one's circle of competence and recognizing the enduring power of compound interest, create a roadmap for anyone seeking financial prosperity. In a world of fluctuating markets and evolving economic landscapes, Munger's wisdom stands as a timeless guide for those aspiring to navigate the financial journey with prudence, patience, and profound insight. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!